Hello, everybody, and welcome to IC Markets Market Commentary. My name is Tamar Mehr from Trade with Precision. So, over the weekend, Iran state media has reported that the Strait of Hormuz is once again closed until further notice, and that could see an increase in volatility around the price of oil. So, I want to start here with a weekly chart on crude oil. Now, if we take a look at the level that we stopped where we found support, it was also the breakup level previously. So for a while, we consolidated underneath this level of 67.5. Then we broke sharply above it, pulled back to test it from above, and continued to a higher high. Now, the weekly chart is in a downtrend, and we push quite strongly to this new lower low. So we do have overextension, meaning a distance between where price action sits right now and the moving averages. So we could see a pullback in the contents of the weekly chart, meaning some more buyers coming back into this market. Now, on the weekly chart, we do need to note a couple of strong levels, and that is in and around the 81.5. We've got a spike here and another touch here, the previous high, and we also have the level around the 90. We can see we had quite a lot of consolidation around this level before breaking through it and pushing to this lower low. Now, if we'll take a look here on the daily chart, we can see that the daily is also in a downtrend. We had a couple of small candles here before this push higher and currently pulling back. So what I'd like to see is if we can get a higher low and look for a confirmation of a change of direction and look for that push toward the level of 81.5. So if we'll take a look here on the 4 hours, we can see that we have a bit of consolidation around the 69.5, and then we broke sharply to a higher high. We cleared a couple of lower highs along the way. So I'd like to see a pullback to test this level from above and then a bounce off it and a push to a higher high. Keeping in mind that this is a counter move to the direction of the higher time frame, and we also could see more sellers coming in and around the level of 81.5. Next, I'd like to take a look at a chart of gold, and I want to start here with the monthly chart. Now, the monthly is in a strong uptrend, and we're simply pulling back into the buy zone, that area between the 10 and the 20 moving averages. We also have the 10, 20, 50 moving averages all fanning, all in the correct order for an uptrend. And we also have convergence here on the recent high between price action and the momentum indicators. Now, as the higher time frame pulling back, lower time frame tend to change direction. And here on the weekly, we are now in a downtrend. But what I like about this area being also the 4,000 round number is that we keep on rejecting these lower prices. So we do have a couple of rejection candle around this area. Yes, we have cleared this previous bullish rejection candle, but we are still holding around this area. So if we'll take a look here on the daily chart, we can see that the daily has now printed a higher high and also a higher low. So if we could push above this 4200 level, that will confirm a change of direction on the daily back into an uptrend. So if we'll take a look here on the 4 hours, I'm looking at this local level in and around the 41.35. Now we can see it has been a level in the past, and what I'm looking for is compressions of price underneath this level, and I'm looking for a break and a continuation of this move, and of course keeping in mind that the area around the 4200 could offer some strong resistance. But if we go back into the daily, If we're able to break above this area, then the next strong level of support and resistance sits in and around the 4,400. Lastly, I want to take a look at the chart of Kiwi dollar. Now, the RBNZ has, as expected, increased the interest rate by 0.25%, and we saw some strengthening of the Kiwi dollar. Now, this is the daily chart, and currently we have, after this push from a lower low, we do have a bearish rejection candle, and a break below the low of this bearish rejection candle could signal a continuation of this move. However, when we go up into the weekly chart, we could see that actually there's another level here in and around the 0.58, and we could see the market pulling back a little bit higher and testing this level from below. This market currently here on the weekly chart, we came from somewhat of an equal high to a lower low. So we could see more of a pullback. And if we take a look here on the monthly, we can see that the monthly is still in a downtrend, and we could see a bit of more of a pullback closer to the averages. Now, the other thing is, if we take a look here on the 4 hours and we think about that daily bearish rejection candle, we can see that on the 4 hours was simply a pullback into the averages, and the uptrend here is still intact. We could see even a pullback into the level of the 57.30. We had a couple of touches around this area, and then see some more buyers coming back into this market. So for a potential continuation of the monthly and the weekly momentum and trend, which is to the downside, what I'd like to see is either the market pushing toward that level of 58.10, so in and around this area, the breakdown level over here on the weekly chart, or on the 4 hours, I'd like to first see a confirmation that we are changing direction on this time frame, meaning going higher, can't break the previous high, printing a lower high, and then going for a lower low. Happy trading, everyone. Bye for now.